All right, well, you know, the housing recovery, it's pretty much far from over. You get new home sales that are still down 80% from their 2005 peak. Home prices are down 25%, if you can believe it, from their record highs. And foreclosures, well, they continue to plague the market. Yes, they do. And despite all that, home builder stocks, they rose more than 100% in 2012. Now, tomorrow we're going to find out more, of course, when Lennar, the first of the big home builders, reports earnings. Analysts are expecting a big boost in profit, but still, most say, you know what? Hold off on buying. So why are we hearing this cautious tone? Let's get three takes for you. Jack Misenko on the fundamentals. We have Bill Maloney on the charts, and we got Larry Shover with your options trade today. All right, first over to you, Jack. Why should we be cautious right now?
Well, when you look at what's priced into the builders right now, you're looking at a level of home sales in the industry. There's really 2x where we saw the peak in 2005. We did about 1.33 million new home sales in 2005 on the single-family side. We think the stock's priced in about 2.5 million new home sales by 2016. Groups being valued off normalized earnings, we think there's too much optimism around that number.
And the stock is just priced too high as it is? I mean, look at that one-year chart, 87% gain there in shares of Lennar.
You know, Lennar is one of the better names in the building space. We've been positive on the past. Why? They've got great margins. They've got a great land sourcing vehicle. It's just that the anticipated recovery in new home sales is so far beyond any sort of optimism in this space. We just think the stock's ahead of itself. And when we roll into 2013 and these comps get tougher on the order side, that's going to begin to cause people to reset their estimates lower. And we think that sets for a correction in the stock.
All right, looking for a correction. What about from a technical perspective? Bill Maloney, could we see a correction coming?
Could be a correction, Trish, but still the long-term charts and the short-term charts still look good for Lennar.
Right.
This is a stock that's gone through classic bearish to bullish reversal pattern. Basically, if we go back to 2007, you had the huge sell-off. Then it traded sideways from basically 2007 through 2011, broke out in 2012, trades above its 200-day moving average, trades above the 50-day moving average, and this uptrend is intact since basically 2011. So as long as this uptrend's intact, charts are positive.
All right, charts looking positive. Larry Shover, what are you doing in the options market right now with Lennar?
Well, right now I'm taking the combination of what both these guys said, putting it together and have a perfect trade right now. Well, right now I'm looking at January 39, 41, 43 iron butterfly. It sounds scary, but what you're doing is you're selling a January 41 straddle.
I think it sounds fascinating, by the way. Anything called iron butterfly. Keep going.
Yeah, you're buying the January 39 put and the January 43 call. Another way to look at it is you're selling the 41-43 call spread and the 41-39 put spread. I think the stock is going to go higher over the next 6 to 12 months. I think the headwinds are well advertised, but for the interim, right now you can sell that iron butterfly for $1.40. The most you could lose is 60 cents. So I think just from a risk-reward standpoint, it makes a lot of sense. If the next couple of days the stock stays below 41.40, or I'm sorry, below 41.40 or above 39.60, you will make some money right away. It's a short-term play, but a good play.
Okay, Jack, let me get back to some real macro fundamentals with you. You know, we're going to hear from Ben Bernanke later in the show today around 4 o'clock. But, you know, all expectations is that the Fed is just going to keep this money printing, if you would, in place for at least the next year. How much do you worry that very low interest rates is creating an artificial market, if you would, for housing, enabling people to buy more than they'd otherwise be able to buy?
I'm actually not too worried about that. I think the bigger issue clearly is the approvability around mortgage, not affordability around mortgage. In fact, I'd actually argue that if rates went up, you'd see more banks lending hard money on balance sheet, and that would create an expansion of credit. Right now, the mortgages that are out there are going to Fannie, Freddie, and the FHA, and you know, banks aren't willing to hold loans on the balance sheet. And when you talk about some of the regulation coming down the pike, or what's been, you know, I saw the QM rules come out yesterday. Basel III proposals are very punitive against holding high loan-to-value mortgages. And you look at the duration risk. You know, owning a mortgage for 30 years at 3.5% is not a great business opportunity for a bank on balance sheet now. So what you're left with is a market that is largely government-driven. And if we could get some of those loans back on bank balance sheets through a higher rate environment, and the banks start doing 5-1, 7-1 ARMs, then I'm actually more excited. I know it's counterintuitive, but you know, when you look at the affordability ratio here, we're about 20% cheaper to rent than own. You have some cushion there if rates were to go up and banks would put it, you know, be willing to put shorter duration paper on the books. Problem is the Fed isn't letting people go to that 5-1, 7-1 market. They're making the 30-year market too attractive, but that's unfortunately what the banks won't hold.
All right. Last question again to you, Jack. What are we going to see tomorrow out of Lennar?
Well, we're looking for 27% year-over-year order growth. The street's at 34, but I believe there are a number of bulls out there north of 40% order growth. The last three home builders that have reported, Horton, Beazer, and Toll, have actually put up pretty decent prints in the quarter, and they've sold off on the day because, again, those expectations, those sky-high expectations just weren't met on the earnings release. So that's, we're a little cautious going in tomorrow.
All right, a little bit cautious. Thanks so much to the whole gang. Appreciate it. Here's a cheat sheet for you. You heard Jack Masenko say he's a little bit negative, neutral to negative on home builders in general. Very cautious on Lennar ahead of tomorrow's earnings report. Bill Maloney says the Lennar charts, though, they are positive and they indicate the stock's going to continue moving higher, at least in the foreseeable future. Larry Shover expects the Lennar rally to pause after earnings tomorrow, but expects it to regain its rally later on. Now, tomorrow, we're going to be giving you 3 strategies ahead of J.P. Morgan's earnings. But we want your take first. What do you do with J.P. Morgan right now? Do you buy it? Do you sell it?